Hi, thanks for joining the video. I'm Paul KD. Today we're going to talk about Japan. And I think it's a really interesting moment in Japan's economy, not just because the Bank of Japan is, sort of been raising interest rates for the first time really in a generation. But I think more because in that process, a lot of people looking at Japan who previously were very much focused on demographics as being a defining characteristic of Japan's economy, and Japan was this aging society and so on. In that process, they've forgotten about how important demographics now are. With the economy looking better, that's been the thing that people are focused on rather than the fact that the population is falling. Now, why does that matter? Why is demographics now important? And what's the question for this video today? The question really is, can consumption in Japan ever grow again? And that really, I think, is a big issue because when you look at the macro data in Japan, consumption hasn't grown at all in real terms since 2013. So there's now been more than 10 years, a 10-year process in which the markets have become much more optimistic, in which the Bank of Japan has been raising interest rates, in which inflation has gone up and so on. In that process, consumption hasn't grown at all. Now, why is that important for demographics? Because the other thing that changed a little before 2013 was that the population stopped growing. And obviously, if there are less people to spend, you might think that that would mean that consumption starts to fall. And so, just at this time, I think, where a lot of people have forgotten or at least pushed aside demographics as being an issue for Japan's economy, actually, when you look at the data, it's suddenly starting to become much more important and much more relevant. So, the question I want to answer today is, will Japanese consumption ever grow again? And and depending on the answers of that, then look at what the market implications of that might be. So the first thing really is to get into the data and look at what's been happening. So as you can see on this chart, this is showing aggregate consumption in real terms. So this is consumption of sort of like things in the sense that we're taking out inflation from this equation, like the real amount of spending that consumers are doing. This is the aggregate amount that's been happening in the economy over the course of the last 30 years. And what you can see is that there was a very good period of growth. I mean, relative to other economies, it wasn't very strong, but there was a clear growth in consumption all the way from 1995 until around 2013. Now, in that periods, there was two sort of crisis eras. So we obviously had the IT dot-com bubble of the early 2000s, and then the bigger rupture with both the global financial crisis and then the earthquake, sort of 2008 and thereafter. So there were things that interrupted the process of the growth of consumption, but generally speaking, consumption was growing quite steadily. And then you look at what's happening since 2013, and there's basically no growth at all. And in fact, where we look at consumption today, consumption is now lower than it was back in 2013. And why do you get that big leap in 2013 that you can see on the chart? Well, that's because the government at that time raised the consumption tax. And this, relative to other economies, these consumption tax changes have a much bigger impact in Japan than they do elsewhere. But what happened in that process was people rushed to go and buy things before the sales tax was increased. Therefore, afterwards, there was a fallback in consumption. But really, since then, there was never any recovery. So again, in aggregate terms, consumption today is no higher in real terms than it was in 2013. Now, why does that matter when we think about demographics? Like, why is that something that I think is still relevant for the economy today? Because when you think about what's been happening with the population, it doesn't look very coincidental that consumption stopped growing in the early 2010s. The reason being because the population's also stopped growing from about 2008. Now, if you think about the working population in Japan, so the number of people aged between 15 and 65, that peaked at around sort of the late 1990s. So the number of people of working age in Japan has been falling already for about, 20 or 30 years or so. But the overall population, that didn't stop falling. That started falling until 2008. And obviously, one of the reasons for that difference between what's happening with the working population and what's happening with the overall population is the fact that there are people living longer. And so there is an increase in the number of elderly people in the population, which meant the overall number of people in Japan continued to rise. That process continued until about 2008. Then the population peaked, and since then, the population has been declining. And it's declining by around, these days around 700,000 people per year at the moment. And between 2025 and 2035, so over the course of the next 10 years or so, the US estimates that the total population in Japan will fall by about 8 million people. Now, obviously, that is not a small number. These are very significant changes in the population. And it is important that that speed of population decline has been accelerating. So if you look at that period from 2008 until, say, 2020, there was a decline in population. But what we've seen since 2020 is that population decline is accelerating, and it's particularly accelerating for the number of adults in the population. Now, again, this all seems kind of very significant for consumption for sort of two reasons. One, because, consumption is determined in large part by how many people there are, how many people have money to go and spend in the shops. If there are 7 million or 8 million less people, you would think it's going to be difficult for consumption to continue to rise. The second thing, again, specifically because of this fall in the number of adults. And obviously the adults are the ones who have the money in the economy, and they're the ones able to consume. So, again, we have this quite clear picture where consumption peaked around, 2013 or thereabouts, just after the population peaked. And you would think that these two things should be related. And obviously, it's very easy to paint a chart where you could show that that is actually the case. And so this, I think, is a very important issue, because if consumption has peaked, it's important to remember that consumption, in most economies, consumption is, say 60% of GDP or thereabouts. In Japan, it's a little bit smaller than that, but it still plays a very important part in overall economic growth and in overall aggregate demand. So if consumption can't rise, then it becomes very clear to be thinking, will the economy, not just will consumption ever grow again, but can the economy in Japan ever grow again if the population is shrinking like this, and that fall in the population is the thing that's causing the decline in consumption? And it's really that, I think, that I want to focus on today. So one thing to be thinking about all of this, right? So I'm going to take a step back and try to identify some reasons why it's probably more of a coincidence that the fall in consumption has started to happen just after the population peaked. And there's other things going on that explain why consumption is so weak in Japan today. Then towards the end of the video, I'll kind of talk about some conclusions for that and what the implications might be. Now, so I really want to talk about sort of four things in the sense of what is determining what's happening with consumption other than the decline in the population. Now, those things are kind of fit into two buckets. One is to think about consumption in per capita terms. So it's important to, think about what's happening in terms of total aggregate spending. So how many people there are in the economy multiplied by how much spending those individuals do each. And on the other hand, to think about it on an individual basis, because an individual basis gets away from thinking about those population changes and gets a bit more focus on how consumers feel in general. Are they feeling positive? They have money in their pockets? Are they able to spend? So I want to talk about that to begin with, what's happening with per capita consumption. And then the second, and the next bucket of issues is really to think about how much income the household sector as a whole in Japan has. And so I'll talk about that in a minute. So the first thing is to think about per capita consumption and what's happening with that. And there, I think there's a very important distinction to draw, because again, when you think about consumption on an aggregate basis, there isn't any growth since 2013. If you think about consumption on a per capita basis, then actually consumption now is at record high levels in Japan. Per capita spending is higher than it's ever been. Now, growth in that isn't particularly dramatic, again, compared with growth that you would see in consumption in the rest of the world. But it is important that it's doing a very different thing from aggregate consumption. And so what this would suggest is actually that consumers in Japan don't feel that pessimistic, that actually consumption is able to grow. And this is, for people who study Japan, this might seem something of a surprise, because one of the other things that we know from the macroeconomic data is that wage growth in Japan in real terms has been quite weak. Now, again, wage growth is measured in per capita terms. This is the wages that the average person receives. Now, that's been growing by about sort of 2 to 3% or thereabouts. But inflation in Japan over the course of the last 3 years or so has been higher than that. So what does that mean? That means that the average person, their money doesn't go so far, therefore they have difficulty increasing the amount of things that they can buy because their money can't buy as much as it did do previously. So if you look at the wage growth in Japan on a per capita basis, then it will suggest that consumption also on a per capita basis should be less. And yet when we look at the data, actually it shows that per capita consumption has been doing okay. So the first thing I think is to explain what's the difference there, what's going on here. And I think the big thing really is, and this was alluded to by Governor Ueda who spoke at the Jackson Hole conference in the US at the end of August, and he gave a speech talking about the demographics and the impact on the labor market of what's happening with demographics. And one of the points he made in the concluding remarks was that basically it's complicated. And actually the Bank of Korea, which has done some very good work looking at demographics in Korea as well, makes a very similar point. That what we're seeing in a lot of these economies where aging is happening quite rapidly is there's also very big change in the supply side of the labor market. And we've talked about those in previous videos, looking at Japan and at Korea and how quickly the labor market is changing. And a few things in Japan stand out. So one is that the participation rate is increasing very quickly. So as I said earlier, the number of people in absolute terms aged between the ages of 15 and 65 in Japan has been falling since the late 1990s or thereabouts. Now, that doesn't actually determine the number of people working in the economy. If you see people who are already between 15 and 65, but who weren't working previously, come into the working force. And that's precisely what's been happening, both in terms of female workers, but also in terms of older workers. And so actually, as much as the population, the number of adults might be falling, the number of people putting themselves available to work has actually been increasing in Japan, or at least been holding sort of stable. And so that's one of the complicating factors when we think about the link between that per capita wage growth on an average basis and per capita consumption on an average basis. The reason those two things might not match is because of this increase in participation. Another important thing that's been playing out in the labor market is that part-time workers, who have been increasing quite quickly in number as the participation rate has been rising, the wages of part-time workers are increasing more quickly than the wages of full-time workers. Now, the reason for that is because part-time workers tend to be sort of all more at the margin of the labor force. They're not protected in the way that full-time workers are. And so the only way that companies can attract these people when the labor market is tight is to increase wages. And so wages for part-time workers are increasing by, say, 4, even 4.5% year on year at the moment, which is actually higher than the rate of inflation. So that's the second thing that's been going on that affects that relationship between per capita wages and per capita consumption. The third thing is that as the labor market has become tighter, companies have become more willing to spend on more expensive full-time workers. And they're doing that because they're worried that otherwise they won't be able to hold on to the good workers that they have. Now, why does that affect the wage data and interfere with the sort of the clarity that we have in terms of what's actually happening with wages? The reason for that is because full-time workers earn more than part-time workers. Their starting salaries are higher. And so that can also affect what's happening with average wages. So taking all of those things together, there is another thing that we can do to try to measure the sort of the purchasing power of the average worker or the purchasing power of the working force. And the way we can do that is rather looking at a bottom-up approach, which is what per capita wages do, is to look at a top-down approach. So in the GDP data in any country, or most, maybe except for China, in most countries, when you get a full breakdown of the GDP, it includes the amount of money that companies are spending on total wages. So this is an aggregate measure of how much companies are spending on employee compensation. So we can take that figure, and then we can take the number of people who are working, or we can take the number of hours that people are working, and we can just work out the difference between the two. And if you look at it on that basis, you end up with stronger per capita growth in wages than are being shown by the headline data that I talked about earlier. So actually, it is sort of reasonable to imagine that in this situation where the population is falling, where the economy is still, in that situation, that actually we could still see per capita spending power continue to rise, and therefore consumption on a per capita basis also continue to rise. And I think that's what we're seeing. So the first thing to remember about Japan is that some of these things in the labor market are quite complicated, but the general picture is there's a big difference between per capita consumption and aggregate consumption. Now, obviously, like that is sort of, that could be an academic distinction in the sense that, as long as the population is falling like it has been over the course of the last few years, it's not really going to matter for the overall economy if per capita spending is increasing. Because if the number of people is falling more quickly, consumption is still going to shrink. The economy is still going to be therefore under pressure. So the other thing to think about is whether aggregate consumption can ever start to grow again. And I think the thing to be remembering there is that actually one of the reasons why aggregate consumption has been held back is not just because of the population. It's also because the household share of GDP has been falling. So when economists look at the breakdown of, if you look at the economy as a whole, right, like you can look at it, you can think of it in terms of the amount of money the people and companies are spending. So the amount of expenditure in the economy. You can think about the amount of output in the economy, or you can think about it as in terms of the amount of income in the economy. And so economists split the economy into the household sector, the government sector, the corporate sector, and foreigners, essentially. And in that process, the amount of money that each sector has to spend changes over time. And what you can see in Japan is that the household share of GDP has been falling over the course of the last, 20 to 30 years or so. The corporate share has been rising. And so if you look at the GDP data, which run from 1994 until today, the corporate sector share of the economy has grown by about 6 percentage points. The household share of the economy has fallen by about 6 percentage points. So this is another critical factor in understanding why consumption is falling in Japan, because consumers, households, are getting a lower share of income. They're getting a smaller share of the pie than they were historically. So looking forward from here, the critical question about whether consumption in Japan can ever grow again is really whether the household sector can start to get a bigger share of the economic pie once again. And there's 3 things here to be thinking about. The first is the wage component. So that is what I talked about earlier in terms of that employee compensation figure, how much companies are spending on wages at an aggregate level. Now, actually, if you look at the official data says yes. And this is like again, it's a well-known sort of way that economists look at the economy. It's called the labor share. What's the wage share of the economy? Now, when you look at that in Japan on a headline basis, it actually looks quite stable. So where in other economies, the labor share has been falling because companies become more powerful, in Japan on a headline basis, it doesn't look like there's been much change. However, one thing to realize in Japan is that over the course of the last 30 years or so, there's been a big fall in self-employment. And the pay for people who are working on their own or for small entrepreneurs, that's not captured in the labor share of the economy. It's captured in other ways. Economists call it mixed income in general. It's where the income comes into the economy and it's unclear whether it's going to the capitalists or it's going to labor. So it's called mixed income instead. Now, if we look into that and we incorporate that as kind of the labor share as well, then we start to see a much more clear pattern where over the course of the last 30 years or so, the labor share has been generally shrinking. But labor is getting a smaller share of the economy than they were previously. Now, that's clear on a general basis. The Bank of Japan looks at a quarterly data set which tracks this, and that actually suggests that the labor share has fallen particularly quickly since COVID. So both in terms of a structural perspective and also in terms of a cyclical perspective, households are getting a smaller share of the economy than they were before. And obviously for people who know about Japan and particularly know about markets in Japan, this wouldn't be a surprise because everybody is familiar with the fact that profits as a percentage of GDP are record high levels in Japan. And it's not quite the same. It's not quite an apple for apples comparison, but still, in that scenario, it would look like companies getting a bigger share of the pie, laborers are getting a smaller share of the pie, and that's been a problem for the economy. Now, it looks like, I think there's a couple of reasons to think that process probably is now near to an end. So first of all, just cyclically, what tends to happen is that in the early stages of an economic recovery, the corporate share does tend to rise, the household share does tend to shrink. Now, the economic recovery has been going on for a few years now since COVID. As I said, the quarterly data that the Bank of Japan looks at looks quite severe in terms of how small the household share currently is. It would look like this now starts to bounce back. But the other thing that's going on is precisely the demographics that are affecting consumption. Because obviously what's going on in Japan is as the population begins to shrink, and as the participation rate has increased so much that it can't increase any further, and again, that was a point that Governor Ueda made at the Jackson Hole conference a few weeks ago. In these areas, it would look like the labor market, the number of people coming into the labor force can't increase anymore. As that happens, essentially you end up with a supply shortage of workers. And obviously what you would expect from a demand-supply perspective, if there's not enough workers in the economy, then wages should start to rise more quickly. And I think we're close to that process beginning to happen. So I think in terms of this labor share and where we are with the economy, it's probably likely that we're quite close to the floor and that from here we should start to expect, again, precisely because of the demographics that are weighing on the consumption in terms of aggregate terms at the moment, precisely those demographics mean that the wage income of the household sectors should start to rise from here. So that's one point in terms of thinking about the household share. The second point about thinking about the household share is thinking about other sorts of income that households get. So in addition to wages and, the amount that we get from going out to work for a company, another source of income for the household sector is income that's earned from savings or from investments in property or for investments in the stock market. And that, again, is an important source of income, across the world. But again, in Japan, what you can see is particularly from the 1990s until around 2005 or thereabouts, this share of the income, the income share or the proportion of GDP that households got from these kind of sources of income, that was also falling. Now, again, it looks like that process is now beginning to reach a floor, because the reasons why the household share was falling was sort of obvious. And that's because the household sector is the big provider of financial assets to the economy, right? Households are savers in general. So households tend to save in terms of assets. Companies tend to borrow. Why is that important over the course of the last 30 years? Well, because interest rates have been falling forever, right? Until very recently. And so in that process, the household share of the income that's generated from that big store of savings that households have, that source of income will fall over time. And that's precisely what happened in Japan. The other things that were going on was the corporate sector wasn't in very good health, so dividend payments were low, and the housing market was dropping. And so rental incomes were also very low. Now, over the course of the last few years, all of those things are starting to reverse. Interest rates are starting to go up, like slowly in terms of the front end, more quickly, very quickly, in fact, in terms of the longer end of the curve. The housing market, particularly in Tokyo, is doing quite well right now, and the equity market has gone up quite a lot, and dividend payments, partly because of corporate governance reforms, are now starting to happen. So the first thing I talked about was the wage income and the labor income starting to come back. The second thing is this income from financial assets probably should also start to rise over the course of the next few years. Now, there's one final point and one final big source of income for the household sector that we haven't discussed yet, and that's income from the government or, social security payments, essentially, like the tax and social, the balance of tax and social contributions that households make against the social contributions they get from the government in terms of healthcare and pensions and so on. Now, this is also a very important source of income for the household sector, and is also, I think, probably even more than demographics, really explains why the household sector in terms of aggregate consumption has stopped growing since 2013. Because not only did the population stop rising from 2008, but what happened thereafter is that social security payments on a net basis from the government stopped rising. So again, if you go back and think about the consumption chart I showed earlier, where from 1994 until around sort of 2013 or thereabouts, there was a steady increase in consumption. In that time, there was also a steady increase in social security payments coming from the government. Now that's then stopped. And there's a good reason why that's happened, and there's a reason why it's probably not so beneficial why that's happened. So the good reason, or the understandable reason, is because of the fiscal situation that the government faces. So again, and partly because of demographics, and demographics, as again this video shows, as other videos we've done show, demographics are a huge issue for Japan. They're a huge issue for the whole region. Why is it important for social security? Well, because the government can't afford to increase social spending forever. And we know that the demands of the elderly sector in terms of both healthcare and pensions are very large. And as a statistic, the government in Japan says that when people get over the age of 75, spending per capita in terms of healthcare rises 4 times or thereabouts. So it is very expensive to care for an elderly population. The government, looking at its balance sheet, said we can't afford this anymore. And therefore, from 2013, Social Security stopped rising. So that's the kind of the understandable reason. But the other thing that was happening was there was an agenda to try to reduce the corporate sector's tax liability. So to give benefits to the corporate sector. How do you do that and therefore keep without impacting negatively on the fiscal position of the country overall? The only way to do that is to cut benefits for somebody else. So this is like one sector wins, another sector loses. They're two sides of the same coin. The corporate sector got tax cuts. The household sector essentially got tax rises or less benefits from the government. And so again, I think this is a very critical reason why the household share of income stopped rising. Why is this important today? Well, we've seen 2 elections over the course of the last few months or so. The ruling LDP has done very badly in both of those. The opposition parties have done much better. What's one of the campaign promises of the opposition parties is to increase household incomes. It's to care for people's incomes. Now, the opposition parties to begin with were saying, what should happen is the government should cut the sales tax or it should cut income tax for consumers, but without really talking about how that will be paid for. And I think, there's another thing in economics, right? So Ricardian equivalent. So it's sort of this idea that if let's say a consumer, right, the government gives them a tax cut today, they won't go and spend that money if they think the government's going to have to raise taxes in the future to pay for that tax cut. That's the idea of Ricardian equivalence. And so what the opposition parties tend to do before the election was to say, we're just going to cut taxes, but not how we're going to pay for that. It wasn't clear, actually, that would be economically effective for the household sector. But since the election, what's happening, because the government party did so badly, now there's more of a debate about actually what should happen with taxes. And it looks like Japan is moving towards a situation where there probably are going to be more tax benefits for the household sector, but paid for by corporate taxes going up. So now we have the third part of the story. The first thing is that the labor income share should start to rise. The second thing is that the financial share of GDP is also rising for the household sector. And the third thing, potentially, is that social security benefits or the net payment from the government should also start to improve. So essentially, all of those three things together should mean that the household share of GDP starts to rise. Now, again, when you've got the situation where per capita consumption is recovering, I would say it's quite strong, but per capita consumption is recovering, if at the same time you have aggregate income starting to increase for the consumer sector, this would suggest that actually consumption is going to start to rise again. That this period since 2013 until now has been unusual. It's not going to persist, and from here we should start to see consumption rising once again. Now, I think there's a couple of risks that I should say around this, and a couple of uncertainties. So one is, I sort of alluded to it earlier. When Governor Ueda spoke in the US at the end of August, one of the points he makes is these things are very complicated. And actually, I've been doing some work recently looking at the labor share, how demographics affects the labor share. And if you take a step back and think about this, the labor share is the contribution of the number of people against the amount of money each of those people is earning. Now, if you think about how demographics affects that, on the one hand, you have wages per capita should be rising because work is becoming less available. On the other hand, you've got the fallen number of people. So one offsets the other, and potentially wages won't go up and the labor share won't rise, even though demographics are coming through. And really the way to think about this and to get the answer to this is how substitutable are machines for labor. So if you're a company sitting in Japan right now, wages are going up. Your strategy is try to find machines to replace workers. If you can do that, it will mean that as demographics start to impinge on the labor market, the labor share of income won't rise. If companies can't do that, and I think it's probably likely that it's going to be difficult for companies to do that, then instead we're going to see wages rise more quickly than the fall in the population, and therefore the labor share should start to rise. So that's one thing to be thinking about. The second thing in terms of the risks around this and thinking about where consumption goes from here is, again, the economy hasn't grown. It's not just consumption hasn't grown since 2013, but particularly since 2020 and COVID, the economy in aggregate has grown less than 1%. Now, the Bank of Japan still thinks the potential growth in Japan is somewhere between 0.5 and 1%. Now, if the economy is growing like that, it becomes much more reasonable to think that consumption would also be growing by 0.5 or 1%, or perhaps even higher if the labor share rises. So you do need to see both, you need to see companies not able to completely replace workers with machines. And the second thing is the economy starts to grow once again. But my base case for Japan is that actually I think this period since 2013 is quite unusual, but it seems likely to me that we will start to see the consumer share of GDP starting to rise, and that we will start to see aggregate consumption in the economy also starting to rise. If that happens, that's an increase in aggregate demand, which actually then reinforces some of the inflationary picture that Japan currently has. And so essentially, I think the conclusion from this would be that we should expect to see the economy become more normalized, the consumption start to rise, and again, that feeds into this normalization of monetary policy that the BOJ has been pursuing and has been interrupted by the increase in tariffs that happened over the course of the last few months or so. And so I think that's what we should be looking for, that consumption will rise again, and then the economy starts to grow. And just think about those two risks I highlighted earlier. Now, again, this is all based on the analysis that we do at East Asia Econ. I think it's quite a comprehensive platform now for both looking at the data, tracking what's happening with cycles, and looking at analysis of what's happening in the economies of Japan, China, Korea, and Taiwan. So if you're interested in these economies, if you're interested in demographics, if you want to know about what's happening in one of the biggest economic areas in the world, then I think we have a lot of resources available for you. The video is one example of that, but please go and check out the website, eastasiaecon.com. Thanks very much for watching.